Welcome to The State of Us. Real people with honest opinions and the future of responsible media. Here's your host, Justin T. Weller.
Decades-old FICO score is about to change, kind of. So obviously a pertinent topic to anybody who has ever borrowed money or is planning to ever borrow money, i.e., do you have a credit card? Do you have a mortgage? Do you want a car? For most people, the answer to those questions is, of course, having to borrow money. If you're going to buy a house, if you're going to buy a car, most people got to borrow something for it. So this could and almost certainly will affect around 30 million Americans, potentially more, depending on whether or not you elect into it. So we're going to give you the lowdown on what exactly is changing with FICO and what you should know about it. But of course, we couldn't begin a conversation on banks and finances and money without
your friendly redneck liberal, Lance Jackson.
Don't like borrowing money.
Borrowing money.
Do not like to borrow money.
Okay.
Don't like the fact that I owe anybody anything.
But you do.
I don't want to be indebted to others. Yeah, I'm getting closer.
I don't like it.
The only reason I don't take
money.
The only reason I don't liquidate every dime I have and pay it off is because all my money managers say that's stupid.
And you trust them.
We're
apparently.
earning you more money than you're paying on your debt. And I'm like, okay, logically that makes sense, but can't we just take out a few thousand and let's pay these people off?
It's like you're voting
you're
voting on Tuesdays, right? You know logic, but at the same time, just same thing with your online account manager for your bank, right? You could have it, but you don't want it, even though it's all stored online.
No, you know what my phone said?
Safer.
You know what my phone company did?
What?
They just automatically put me on online billing.
Yeah.
And I've got 2 weeks to get off of it. So now I've got to go on the computer to tell them that I don't want to be on online billing.
Yeah.
They're going to freaking pry my phone out of my cold dead hand. Because I ain't going to pay them. I'm not. They can put me online, but I'm not going to pay them. Anyway, I digress.
Most of them now, you have to pay extra if you want a paper bill.
Yeah, if they go there, I may not be able to get contacted.
Because that's the deal.
I may not have a phone.
I think I don't think. I know we're with AT&T, and I think the deal now with them is, and I mean, they're one of the big ones, is.
I think that's what it's getting to. Yeah, I haven't gotten
if you get a paper bill, it's like an extra $1 or something every bill.
Yeah.
Because they're basically passing along the cost of the paper, the envelope, and the mailing, and all the handling of that to you. They're saying, yeah, we're not going to pay it. 90% of people don't want it by paper, so anybody who does, they can pay for it because... Yeah, we'll send it to you as long as you pay for your bill. There's a notion, right? You got to pay to get your bill. I wish I'd thought of that. That's pretty smart. You want to buy my stuff? Great. Okay, pay me so that you can pay me. Pay me to pay me. So speaking of companies and good ideas, let's talk about the new FICO score. The UltraFICO score, as it is called, is not meant to weed out applicants. This is according to the Wall Street Journal, Monday, October 22nd edition. Rather, it's actually designed to boost the number of approvals for credit cards, personal loans, and other debt by taking into account a borrower's history of cash transactions, which could indicate how likely they are to repay. So the new score has actually been in works, Lance, for several years here. This isn't just like, oh, we just thought of this a month ago and we're putting it in action next year. They've been working on it for a while. And there's a few different things that go on here that make it different from your traditional FICO. So the traditional FICO score is primarily based on things such as your the amount of credit that you've been approved for. So naturally favoring people who have larger amounts of available credit, and your credit payment history, which again, if you don't borrow a lot of money and make a lot of payments, means that you might have a worse score even if you're actually not a bad lender, right? So there are some loopholes in it. Mm-hmm. Dave Ramsey has dubbed it the I Love Debt score, which is, it's fairly accurate. It is The main score is about how much debt do you have and how well do you pay that debt. You know, that's a lot of what it's about. So the UltraFICO score will function as an appeal of sorts, likely boosting many applicants with less than ideal records. If an applicant's traditional FICO score falls short, a lender can offer to have the banking, a lender can offer to recalculate the score based off of banking activity. Would-be borrowers with at least several $100s in their accounts who have had accounts for a while and who transact frequently and don't overdraw are likely to see their scores rise. Mm-hmm. So the difference is the UltraFICO really doesn't focus much on your lending per se as it does on, do you have a bank account that money comes into frequently that you don't overdraw? Mm-hmm. That's mainly the new score. And I know some people are probably like, it took them years to come up with this, you know, but I'm sure that there's some complexities to it, like with the regular score that they don't tell us, which has always boggled my mind. We don't.
It's a secret society.
Yeah. We don't know how it's calculated, but thanks.
We're a private business and this is the way we do business. And we don't have to tell you how we do business because we're a private business.
Yep. Even though everybody has to use this if they want to borrow money.
Well, yeah, but nobody's making you borrow money.
That's right.
You don't have to use it to borrow money.
Yep.
You got a loan shark down on the corner. You can borrow money. They got rules, don't they?
Yeah.
Well, and they tell you straight up, right? Well, so would you rather borrow from them or would you rather borrow from the bank that doesn't tell you how they figure it up?
Yep.
You know, the person on the corner tells you straight up how they figure it up.
Uh-huh. And what happens
and what happens if you don't? Yeah, they'll lie.
It's pretty straightforward.
And the government's not involved to help bail you out.
Nope. FICO.
So, I mean, there's another way to get money.
Mm-hmm. FICO has said that about 7 million applicants who have low credit scores as a result of thin borrowing histories will likely see their scores improve under the new system. Separately, some 26 million subprime borrowers will end up with higher credit scores, FICO said, with nearly 4 million seeing an increase of at least 20 points. So, you know, noticeable enough. And then there's a few other points here, but before we get to those, I think never
mind.
Go ahead.
So we're creating a way for people that shouldn't be getting money anyway to get money so we can have more people go into debt who will default on their loan. And once again, the banks will need a bailout by the government, and the hardworking, hard-paying citizens like us get messed over in the end.
Yeah. So the two things we're
not going to go there.
There's two things. Well, it works well leading into what I was getting to next.
Oh, okay.
The two things to keep in mind.
That's what I saw. Subprime lenders are going to get a boost. So we're going to loan. We're figuring out a way to loan people money who shouldn't be getting money in the first place because we've given all the money out that we can to the people that deserve the money. And so now we're ready to take a risk, because if we don't take a risk, we don't make any more money. And if we don't make any more money, then our stock price doesn't go up on our company and we can't keep our shareholders happy. So we're willing to take the risk now. And we're going to create a new rule to where we can lend money to people who really don't have the financial history to lend the money to in the first place.
So
Did I wrap it up?
Yeah. In a slightly more journalistic, writing format here.
That's just the redneck version.
We've got 2 points. Number one, banks have spent much of the past 10 years chasing ultra credit worthy borrowers. Yet the slice of the market, which has grown as the economy has improved, is largely tapped out. Point number two, as a result, lenders have been asking credit reporting firms and FICO to figure out a way to help them boost lending without taking on significantly more risk. And regulators have expressed interest in exploring ways to increase access to affordable lending for consumers who have no or low credit scores. So not exactly the same as what you said, but kind of close. And that brings us to this. We basically only have two questions today, guys. The first one is, are UltraFICO scores a good idea? And I think to answer that one, we look at what are the pros and the cons. In my mind, Lance, right, the pro is this idea that they're going to take something into account other than I love debt and how much you love debt, right? That's a plus. Do you have a bank account that cash comes into, that you keep at least several $100s in, that regularly comes in and goes out, and that you don't overdraw? I.e. indicating that you have some kind of financial literacy and you're not completely inept when it comes to money. That's a positive. The downside of this is it seems like it could be motivated, despite the bank's, air quotes here, better intentions, as we really want to go back to post-2008 when we could lend money to people who shouldn't be given money.
We want to go to pre-2008.
Yeah, sorry. Yeah.
Not post.
Right.
Because we are dealing now with a
post.
system.
Right.
In the last 10 years,
we want to go back to pre-2008
rules,
where anybody can buy a house.
Right. You've got enough to make 2 mortgage payments in your bank account. So we're going to loan you $200,000 because, hey, you got at least 2 months worth of payment in the bank.
Yep.
So if you never make a payment, we're going to get at least 2 payments out of you.
Uh-huh.
Dumb.
And then we triple sold the loan to other people. And the federal government's got it insured, so it's all good, right?
Well, why wouldn't I do it if I'm the banks?
Yeah.
Why wouldn't I ask for it? Because the last time this backfired on me, I got my butt saved by the government, by the taxpayers.
Too big to fail.
That's right. I get to take the risk with none of the penalty.
Yeah.
I mean, why wouldn't you do this if you were them?
So
now I can argue the other side if you want.
Give me your pros and cons though. Let's hear, what are the pros? Let's start with that.
The pros?
Yeah.
Well,
anything different than what I said?
They can loan more money to people, which gives people a chance that wouldn't normally have a chance to achieve their dreams. It will also, if it works, make the value of the stocks that I own go up, which means I'll make more money in retirement. So that's a good thing. Okay. And it gives people a chance. So stock prices will go up. The stock market
for whatever they need the money.
The economy will continue to grow and things will be good because more people will be able to borrow money and spend that money, which will then grow the economy, which on a normal day is good for anybody and everybody. The economic growth is good. It's good for jobs. It's good for wages. It's good for investment. It's good for savings. It's good for everybody. So those are the pros.
Let's then talk about the cons in your mind.
Well, the cons are, for those of you that are old enough to go back to 2007, 2008, 2009, when the stock market lost almost 50% of its value and people were thrown out of jobs and people were defaulting on loans and couldn't make their house payments. And there was a drop in housing prices because nobody could afford them. And all of a sudden you owed $500,000 on a home that was valued at $200,000. So you couldn't even sell it to get out from under it without still being in debt. And so here comes the federal government to bail out the banks because we can't all function without the banks, because that would throw us back to 1929 and the start of the Great Depression when the banks were closing and people lost their life savings forever. And so that's opening up that Pandora's box by giving people money who are iffy on whether or not they'll ever be able to pay it back.
I just want people to know that the official iffy is
with the hand motion.
Yeah,
iffy.
Hand in the midair, and then you just kind of twitch the wrists.
Right. Yeah.
Just a little wrist roll.
Kind of so-so. They're kind of iffy. Yeah.
So. See, they don't have the benefit of. They just have to listen to. I know it sounds terrible, but they just have to listen to what you're saying.
And if they can't hear the disgust in my voice, I'm sorry.
So,
I mean, if I'm the banks, if I'm the lending companies, I want this because it gives me an opportunity to get more customers. And I'm probably not taking that big of a risk because the last time I took these types of risks, somebody bailed me out.
Right. Yeah. I mean, it's just
so I'm playing with house money.
Yeah.
We're
all riskier with money that's not ours.
Sure.
I mean, who isn't? Right?
You give me your money, I'll go play the ponies.
Yeah.
I'll go to Vegas on your money. I'm not going on my money.
Yep. So let me ask, I mean, it's probably unnecessary to ask because people can probably draw this conclusion, but do you think this change is a more good or more bad? Net positive or net negative to the system? He's actually thinking about this, folks. The gears are grinding. I know you can't hear him.
I'm all about giving people an opportunity because I was someone who would not have been loaned money. I mean, I didn't have any credit.
At one point.
And people had to take a chance on me. All right.
Lending laws were different then, though.
But right. I was a hard worker and I was able to pay things off, and I paid things off early. And because of that, I can pretty much borrow any amount of money that I want. Now, the flip side is I don't like to owe people money, so I do everything I can not to borrow money. I'm not sure that everybody's me, though, that the majority of people are me. Maybe the majority of people who listen to this show are like me, but I think the majority of people are, hey, I've got money. Let's go spend it. I'll always have this job. I'll always be making this much income. They're not saving for a rainy day. They don't have a long-term plan. And so they get their money and they spend it, and things are fine as long as things are fine. And I guess I know well enough from A, when I was reading history, and B, coming up in a family that didn't have a lot of money, that it's not always rosy. And so I'm always pessimistic when it comes to money, and always want to have more than enough hidden away or squirreled away somewhere in case the worst happens. Now, I've been lucky, knocking on wood there if you couldn't hear it, that the worst hasn't happened.
Right. You haven't had a situation.
So
where
according to my
necessary.
wife and my friends, I'm, quote, really, air quotes, sitting pretty. I'm really good. Okay. Yet I still
anxious.
I still roll pennies, nickels, and dimes and pick coins up off the pavement and things like that, because you just never know.
So,
and I'm not so old. I didn't live through the Depression, people. Okay. I'm not that old, but I just
really,
and I can see it. I know my money ways are like that. I mean, they really are. But I just don't think it's a good thing.
So net negative.
The net is negative.
Okay.
Even though there's a possibility for things to be positive for me, in that my investments would do better.
We'll turn to a slightly more positive note here in a moment, but the last thing to share with you before we talk a little bit about what TrueChat's trying to accomplish.
Do you think? I mean, you're younger than me.
I think it's a net negative. I really do.
But you're a fiscally responsible young person.
I suppose it depends on who you ask, right? I mean, if you ask Dave Ramsey, no, because the amount of debt that I carry is, I mean, any debt in his mind, right, is too much. So, I mean, if I had $2 in debt, that's too much. But I obviously got more than $2 in debt.
And I agree with that. I mean, I'm doing everything I can to pay off. I never pay the minimum on my bills.
Yeah. I agree with that in theory. I think it's a great theory, but also being someone who's trying to make a go at
a startup business.
Yeah. And trying to live while you're making that whole process. Do I think that everybody to be happy has to borrow money? No, absolutely not. I think there's many people who could, if they wanted to, go through life and never have to borrow a dime. And I've known a few people like that, and that's great. I mean, that's fine if you can do that. I think there's also a lot of people, though, like you said, where lending money is the opportunity they need it if they want to get what they're after. I think that it's a good idea to make some changes to it, because I've thought there's a lot of things wrong with it. I still think there are a lot of things wrong with it. I just don't know, kind of like you said, I don't know.
There are people that would be good to lend money to.
Yes.
That will be helped by this.
Yes.
But, and I don't have any facts, but I would say that would be 3 out of 10. 7 out of 10 people that are going to get money from this are probably at some point, for reasons maybe not of their own doing, have trouble paying this money back.
Yep.
That's why it's a net negative.
Exactly. That's why I'm of the same. When I first read it, I was excited because I'm like, okay, we're going to start to take into account some things like cash and cash flow and do you overdraw? And I think all that is positive. But as the article points out, the largest number of people, who are some 26 million, who are currently classified as subprime borrowers, will end up with higher credit scores. Now, are all 26 million, does that mean that, everything's going to, no, none of that. But A number of them are subprime because they should be subprime. I'm sure some of them are subprime who shouldn't be, who, because of the way the FICO system is, they're listed as a subprime borrower, even though they'd pay it back and more, they'd be responsible, but they're unfairly classified that way. I think there are better ways to improve it than this, is why it's a net negative. Gotcha. I think there's a better option. Of U.S. consumers with FICO credit scores, a record 58.2% of them have a score of at least 700 or higher. So there's an actual, not an average. Now they go on to say the average FICO score is at 704, but 58.2% have a score higher than 700. I was surprised by that. Truthfully, that was because growing up, and they give us a chart, so you know why I chose this, right? We started in 2000, right in 2008 before the crash. The average FICO score was 690. Okay, and then you're looking at in like 2009, we've dropped to 685 approximately, and now we're back up to 704, so better than before the crash. The interesting thing here is that it surprised me because I had grown up thinking if you got over 700, that's great. And it's not that that's not true, but when over half of everybody has over 700, is it really that good anymore? What do you have to have now? You got to have an 800? What's the...
Well, and the problem is for the bankers and the lending institutions is that they've tapped out all those people.
Right.
Everybody with a score like that.
They're unwilling. Those people are unwilling
to take on more debt or are already maxed out on their debt.
Yep.
It doesn't say which it is.
Yeah.
They're either unwilling to take on more debt or they're already maxed out.
Yep. In other words, if they take on more debt, their score would then drop below 700, and that would become a problem. So Lance, tell us, because I want to go on here and talk about what could be better. If Lance and I were king and we could just say, we're going to design a better lending system. We're going to talk about that in a second. But before we do, why are we here talking about credit scores?
Well, our mission is to educate people by providing honest, open, and respectful conversations. That's it.
That's it?
That's all there is to it.
That was quick.
Yeah, well.
Great. Do you think we're doing that today?
I'm being honest and open.
Okay.
I'm trying to be respectful. It's hard for me to be respectful sometimes when it comes to money.
Yeah.
But I am being honest and open.
Because you think people are dinguses?
No, I just...
Maybe a little. Hey, if you have ethical concerns while Lance is chewing on that, email ethics@truechat.org. So if you think we're not upholding the mission, ethics@truechat.org.
I've got a friend who's been to a lot of nice places because every year he takes out a loan to pay for his family's vacation. And then he spends all year paying off the loan.
Isn't that like paying somebody else to save for you?
So he can take it, right.
Because he's got the money to make the payments on it.
Right.
So he could just save it and not pay for the loan. Lance is in pain, just to relay to our listeners. So that's what frustrates you.
And I keep putting money away, keep putting the money away.
Yeah.
I'm not going anywhere. So when it's all said and done, he's going to be better off in their old age.
Huh? Probably
them, because they've gone places, done things, seen things.
Yeah.
I haven't.
And you said they can handle it, right? They're making the payments. So
sure.
That's the...
So who am I to criticize them? It just makes my skin crawl when I think about that, taking out money to go somewhere.
I don't like actively thinking about the debt that I have, similar to the reasons you do, because I spent senior year of high school in a Dave Ramsey financial literacy class. And so while I don't agree with everything that he professes, I agree that it's a way to do it, to be financially independent, to gain wealth, air quotes, whatever that means for you. I think it's a valid way to do that for many people. I also think that there are better ways than what he professes. That the adage of, if I want something that I don't have the money for today, the only way that it's responsible for me to get it is to wait 2 years and save enough money. I don't buy that that's the only financially responsible way. Because again, if you go back to like your friend, I want to take the vacation and I know I can pay it off over the next year, but I want to take it now. And I know I can make the payments. is it irresponsible to do that? No, it's just a different way he wants to spend his money. So that's where I think there's a little bit too much judgment in the financial world of, what is and is not responsible, because it is all about, if you know what risks you're taking, which means that maybe your retirement's not as nice because you didn't stash away as much, as long as you're okay with that and you've accepted that, then I'm not going to tell you that you shouldn't do it. And I tell my
spouse that every day.
Yeah.
Can I retire? Yep. How do you want to live?
Yeah.
You're basically going to work every day to live a nicer retirement.
Yes.
It's your choice.
Mm-hmm.
Yeah,
if you're okay living,
we've got enough right now.
We can live.
We don't really do a whole lot and, just kind of exist and go see our kids and maybe go somewhere low, cheap, Disneyland.
If you're smart.
Cancun or something once a year, visit family.
Mm-hmm.
We can make it quite simply for the next 20, 25 years.
Yeah. But you have to be okay with.
Right. But if you want to go to Hawaii for a month and you want to go to Australia 1 year and you want to go here and you want to travel Europe for 2 months or whatever, well, you better keep working.
Yep.
Or we're going to eat a lot of tuna fish and macaroni and cheese as 60-year-olds,
mm-hmm.
To be able to afford that.
Hey, what's wrong with mac and cheese?
Nothing.
Hating on the mac and cheese.
No, that's how
man.
I started out my life. We got
I'm still going to eat mac and cheese when I'm 60.
We got married, and it was boxed spaghetti dinners and boxed macaroni and cheese, and
I told you we eat a lot of frozen food right now.
Yeah. I eat all kinds of stuff, like that, and now my wife is a big one on, well, I'm too tired to cook. I don't want you to cook. So I want to go out and eat.
Mm-hmm.
Okay. I said,
and you can do that.
And we can do that as long as you keep working.
Right. Yeah. As long
if you're ready to quit eating out 4 or 5 nights a week, then we can retire. You can retire right now.
Yeah.
So it all depends on how you want to live and what you've done.
So what would a better system look like? And I guess I made you start on the last one, so I'll start on this one.
I don't know. I think, I will tell you very simply, I think a better system is people need to save for their own retirement. And whatever that means, I've said this to you before, you pay yourself first when you get your paycheck. Put away that money into whatever you want, whatever you're comfortable, whether you're buying gold shares or whether you're buying oil stocks or whether you put it in a mutual fund or an IRA account or you handle it or somebody else handles it. I don't care.
Do something.
You do something for yourself first and then learn to live off of what's left. And what you end up doing is you find out, okay, I may eat mac and cheese, but now I have $500 at the end of the year. That's $500 I saved. I didn't know because I put, $10 a week, boom, I put that in savings, automatically. My goal has always been to put 10 to 20% away in savings and live off of what was left. And people say, you what? I don't have enough to pay the bills at the end of each month. I said, that's because you get your paycheck and you spend it.
Right.
And then you try to pay the bills with whatever's left over.
Yeah.
And
then you try to save if there's anything left.
Right, off the top.
And it's got to be the opposite.
Right, off the top, I take 10 or 15% and put it away.
Yep.
Whether
it's gone.
And it's gone. And I don't even look at it to spend. That's right. And my wife would go, no, we've got that money. I said, no, we can't use that money. She goes, well, yeah, we can. That's our money. No, can't use that money. That money's for retirement,
Even though that's where you are now.
Right. Yeah. I'm still that way. Right. I'm still that way.
No, I can't spend it. It's for retirement.
I'm like, we don't have any money to pay our bills. She goes, you do know that we're saving, like 35% of my paycheck. We're putting it away.
Yeah.
And I'm like, yeah, that's for retirement. We don't have that money. She goes, we don't have to save that much. Yeah, we do.
Yes. So what does a better lending system look like? My thinking is they've got to take something.
Because people don't know anybody anymore. I mean, you talked about off air, you talked about your dad's story.
Yep.
Going in with grandpa to the local bank, and grandpa was a businessman in town.
Yeah.
And they walked into the president. I mean, who's ever sat in the office of the president of a bank.
Of their bank.
Yeah, of any bank.
Right. Of it,
just try to get 5 minutes of their time.
Mm-hmm.
You know, and you were telling how your dad as a young man walked in and the president looked at him and said, you want to borrow this much money? And are you going to pay it back? Yes, sir. I will pay it back. Okay. And cut him a check on the spot.
Yeah. Yep.
And that was it.
This is what the payment's going to be. Can you make it?
There was no credit check. There was no nothing. Just, this is what you want it for. You want it for what reason? Okay. What do you think you're going to pay it back? Yes, sir. I promise I'll pay it back. And he got it. And your dad's done business like that his whole life. Mm-hmm. And basically the way I've done business.
Yep.
But now there are so many people and there's so much pressure and I don't, what is a better way? I'm not sure there is a better way. I guess I don't like the question because I'm not sure that we should be giving money to people that don't meet that requirement because then it puts too many other people at risk. Mm-hmm. And that is a concern of mine. I don't mind giving anybody an opportunity as long as it doesn't put anybody at risk who doesn't want to be at risk.
People unfairly at risk who haven't had any say.
If I want to loan you money, mm-hmm. if I want to do something for the guy who's standing on the lady who's standing on the street corner, with their cup out or whatever, and I want to take a risk with my money and do something for them, then that's okay. But when I'm investing in or mm-hmm. your business is part of the bigger economy, and if your business fails, it hurts the economy, which then in turn hurts me. Right. I don't think you should be allowed to do that. Mm-hmm. So I don't know how you come up with, quote, a better system, because I think that system that affects all of us who work and live here in America should not be endangered by giving people money who, under the age-old system, have not been proven to be worthy. I mean, why is the number where it is before mm-hmm. they'll loan you money? Well, because they have mountains and mountains of data that say if we loan people with less than this score, however we get it,
yeah,
the odds are against us ever getting the total investment back, the total loan back.
There's good data. It's also worth noting, though, that Lance and I both, as we wrap up here, we'll leave it to you guys to think about if there's a better system, and we'll crunch on it some. I think the thing to keep in mind is that obviously Lance has been alive a lot longer than I have, but we have both been beneficiaries of this system. In other words, it's worked for us. And my guess is for a lot of people listening to our show, it's probably worked for them too, to different degrees. But the reason we're sitting in the studio that we're sitting in right now with the kind of equipment that we have is because the system has worked for me. It's benefited me. It's worked the way that I needed it to.
Or you've made the system work for you.
Yes. And in my case, I can't profess to anybody else, but I think that that's mostly been the case because I've met a lot of people who make more money than I do who talk about their money problems, and it is kind of upsetting because I'm like, if you knew how much I made, you would be confounded. You wouldn't understand. Well, how do you live? How do you have a house? How do you have a business? How do you? And I don't know. I guess it's because I'm paying closer attention. I don't know. I'll leave you with this. Think about going back to a manual underwriting system, more manual underwriting, and what's entailed in that. Because there used to be a lot more of it, and the system could work then. It's changed because it's more cost effective to not do that. Are we willing to pay more to be able to lend better by knowing people? I don't know, but that's what you guys have to answer at TrueChat.org, Facebook, Twitter, and more. And you can listen to TrueChat podcasts on Apple Podcasts, Spotify, Stitcher, and anywhere fine podcasts are found. For The State of Us on TrueChat in Urbana, I'm Justin T. Weller.
I had it today, folks, and he took it from me. I'm Lance Jackson.
Thanks so much for tuning in. We'll see you next time on The State of Us. Be the change.